The producer price index for final demand in the U.S. rose 0.2% month over month in October of 2022, the same as a downwardly revised 0.2% increase in September and below market forecasts of 0.4%. Thank you so much for coming back, you guys. This is ARCa coming at you with a MULN, raw price action and statistical threat of analysis. Before we get started, please make sure to subscribe to the channel, like the video, share the video with a friend so that you and them could consider joining our trading community in Discord called ARCab. Okay, so we did get some pretty good news with PPI numbers coming in below forecast. Another combination of good within the catalyst of economical measures is the presidential announcement. We actually did get the formal announcement from former President Trump that he will be running for office. And this can likely bring up some pretty good price action for the markets in the coming days. I have made a couple adjustments to our chart, so I'm going to go over those with you right now. So again, you guys, I'm still a bit under the weather. It's a little hard for me to talk, and it's a little hard for me to breathe still. But let's push on through it, right? So if I pause here and there, it's just because I'm really not doing too well. But thank you so much for everybody who's been wishing me well. I appreciate you all so much, you guys. Thank you so much. But let's go ahead and start this now. Okay, so I added to our list here the Dow Jones Industrial and the NDX so that we can see just how much the broader markets are actually pressuring everything. So now we are looking at one example of a mega cap. We're looking at the SPY, the BTC, NDX, and DJI. So as you can see, we actually peaked and faced a downward decline on all of these assets, and this essentially pushed MULN down. I know that the title feels a little bearish, and that is because the technicals are suggesting a bearish outcome or a bearish outlook for the next session. Now, this has nothing to do with the psychological component that President Trump just announced, and also PPI. So there is a potential that we can actually see the markets run just a bit. A smaller PPI number usually is a small indication of a potential top of inflation, or a peak of inflation, if you will. So this is all pretty good news thus far, you guys. So let's go ahead and move on to the next chart and see what we have. Another adjustment I made was to this chart as well. We've been trading this on the 12-hour chart, but I actually since removed the 12-hour chart and restructured the ABCD strategy within the daily chart. And the reason why is because the activity presented here appears to be a potential trading of a range, and this range may actually continue like this unless we have a catalyst like what we face today for the announcement of the running of the presidency for former President Trump. So this can actually reverse our price action as well. Now, and what I mean by a range is actually this right over here. It's between our one spot 272 at 33.08 and our 2 fib at 26.54, which is the bottom entry we were talking about. There is a potential to where we can be trapped in here. And the reason why I'm saying this is because if we don't have a catalyst like the presidential announcement and PPI numbers, then there is that potential that we can get stuck here. Now, we do have a potential of a breakout out of this range due to those catalysts. So I need you guys to make sure to stay on top of what's happening in the broader space as well. Yeah, I'm talking about the broader markets and economical measures right now. These catalysts are the ones that I actually do look at. I don't look at too many company-specific catalysts because I don't trade long term like that, you guys. I'm a shorter term trader, so which is why I follow larger macroeconomic catalysts rather than company-specific ones. Apologies. Okay, so yes, we are currently below our one spot 618, which is at about 29.71. before I say this, please know that I'm not a financial advisor. I can't actually suggest for you to buy or sell any assets. Take whatever I do show within these videos as a form of entertainment. Do your own DD and we'll be okay. So, since we are below our 1.618, this presents a potential tough resistance. Now, since we do have a positive catalyst, there is also the potential of breaking out of the 1.618, reclaiming our channel and using it then as a form of support before a continuation up. The good thing is that all of these daily candles are printing a series of higher lows, which is good. Now, we did break my market structure just a bit right over here, and it is looking bearish at the moment, which can possibly present in raw price action, that is, it can possibly present a test of our initial entry as well. So if your stop losses are right around here, make sure to honor those and in respects to a potential better entry. So if we do reach this level here, it's still a higher low. So we can actually reject from this area in what I've mentioned before to what Wyckoff theory defines as a terminal shakeout or a type of spring. We can actually bounce from this area in that shakeout, thus reclaiming our channel and potentially breaking out of this resistance box that we're in, followed by using the 1.618 ender box as a form of support. That could be in play since we do have a positive catalyst in play, you guys. So also please note that the SMA 10 is acting as a form of resistance here as well. And we have been, in the daily chart, we have been under it for quite some time, but the actual attempt at breaking out of this SMA 10 has only recently happened over the last 2 days. So this is also looking pretty good. Let's pull up the EMAs and see what we have. My goodness, man. Okay. The EMA 7, the 7-day exponential moving average, is also serving as a form of resistance as per expected. So yeah, in raw price action, this is looking like we do have a potential downside coming up, and it doesn't look to be too drastic. What we don't want is to start printing daily closure candles below our channel support. So this is still considered within the channel. We don't want to start printing something with a wick below the support of the channel and the candle closure also below that support line. We don't want that, or else the play is invalidated, and it would cause the stop losses to actually trigger, in which case I would potentially recommend to maybe consider a smaller loss before we continue it on to a downside. But currently I am still long the stock, so I am still expecting a further move to the upside, and the reason why I can say this is because the statistics are still backing our move to the upside. Now, by backing it, new listeners, this is volatility we're looking at, represented by this indicator BBWP. Volatility is direction neutral, so we would actually have to pair it with an indicator similar to this one here, which is a stochastic momentum or a momentum oscillator, in order for us to gauge that bias in direction, since again it is direction neutral. Now, we now have another cross of the volatility component, which is this spectrum line here for the BBWP. We now have a cross below the moving average, which is essentially what we've been looking for. Now, this is a corrective phase that the stochastic momentum is currently facing. However, the moving average is still suggesting an upside continuation. This is on a daily chart, and the move that we were looking for is actually based around the 12-hour read. So if you can see here, the read, it's suggesting a continuation to the downside in the time period that we were actually making this the back test for. So this is also confluent with what I am speaking about, with us trying to test this bottom area before a continuation onto the upside. This move is reminiscent to what happened here. So we can see some potential oscillations within the stochastic momentum oscillator, you guys. So there is a potential that we can be looking at some corrective moves as we make our way to the top. Another reason why I'm feeling as though we could be looking at further upside is due to the fact that now our BBWP volatility component and moving average are starting to approach the critical levels of contraction. So now when we do reach these critical levels of contraction, we then have another buildup similar to this one here, except it's going to be with blue bars, another buildup of volatility and an incoming move potentially to the upside since this looks corrective. Okay, so let's go ahead and move on to the next chart and see what we have. Okay, yeah, let's go ahead and gain a bias in direction for this. I do remember having, let me go ahead and pull this up right here for you guys, because it's gonna be particular to my iCloud. Yeah, this right here. So let's go ahead and open this up so then you guys don't get lost when I'm talking about what the bullish control zone is within my RSI setup, right? So we'll leave this up just like this so you understand what I'm talking about. This is the entirety of the RSI, which is all of this right here. So split into two sections, and these are the sections it described right there. Okay, so the 30-minute immediate short-term time frame is suggesting a continuation onto the downside within full grip of bear strength percentile. Oh, man. Excuse me, guys. And now our bi-hourly RSI is suggesting a little bit of sideways trading, and we are within bear weakness percentile. We're not biased towards any direction, though. So let's go ahead and move up. The 6-hour is in the deep areas of the bear weakness percentile, which means that we can be gravitated towards bear strength. And another downside to this is that we have since made, or currently, actually recently is the better word, we have recently made a bearish cross of the moving average. The moving average is now above us, and RSI signal is below, which is usually bearish. We can be likely gravitated into bear strength right here as well. So now let's look at the daily RSI. The daily RSI is suggesting a continuation to the downside, and it is very much in the deep areas of bear weakness percentile, which means that we can be gravitated right into bear strength. Again, like I mentioned in the beginning of this video, these technicals may actually be immediately invalidated due to the good news that we've received in the economical catalysts, including the presidential announcement. So please take whatever I do show within this video with a grain of salt, because there is the potential that this can just immediately reverse to the bullish side based on market sentiment. Okay, but I think that this is a pretty good place for me to leave off the video. If you have any questions or concerns, don't hesitate to reach out to me. I may be a little slow right now just because I'm a little under the weather, but I'll try my best to reply to you guys as soon as possible. I'll leave the links in the description for you to consider joining our trading community. Lots of good people there. Okay, so with that said, I wish you a good night, and I will catch you at the bell mañana. Adios.